Good morning. This is Sunday, March 5th. I have a minute to put together something while everybody is out the house, which is a rare phenomenon. So I thought I would focus on something that is very powerful, very effective, has really made a difference in my understanding of the market, the trading of the market, how I enter, how I manage when I exit. Okay, so I hope you guys get something out of this. I think it's very powerful, and I'll try to keep it under 10 minutes. Current time is 11:48, so we'll try to keep this under 10 minutes. All right, so the idea behind this concept, and this is something that another very successful trader passed on to me in the last, I would say, month or two, and I see a significant difference, okay, in how I'm trading the market and how how to time the market, okay. That's the hard part. So let me just start with this idea of cycles. The market moves in cycles. And you can see that if you go out to a large time frame, like a quarterly time frame chart. All right. You look at your quarterly time frame, go to the ES mini, or the I like to look at the ES mini, but look at the ES, and what the first thing that comes to mind, we're looking at 10 years worth of quarterly chart data here, and the first thing that I want you to appreciate is cycles. The market typically moves in these cycles, and think of a cycle as a cycle of higher highs. So we have a huge cycle of markets closing higher in this time. Then we had a sell-off here, another cycle here, sell-off, that was 2018 sell-off. There's another cycle of straight 4-quarter cycle sell-off, a big time cycle between April 2020 to 21. That was post-COVID. This was COVID. And then a cycle of lower lows, and now we're in a cycle of higher highs, just backing off the quarterly high of 4217. All right, now take that idea one step further. All right, take that idea one step further, and just imagine that inside of one of these higher high ranges, that you have lots of cycles happening, cycles of buying higher, cycles of buying, cycles of selling. But the end result, is you're anticipating that this candle will close higher on the quarter. All right, but overall, there are cycles happening, but on a smaller time frame. But at the end result of all those cycles, you are having a net positive because you're in a cycle of higher highs. So this is the second quarter that we've been closing up in this current cycle, right? So let's go down to a weekly chart, and you can see again, cycles, cycle higher high, cycle higher high, cycle high, closing higher, then a cycle of lower lows, of closing lower, cycle of higher highs. We had a cycle of lower closes over the past 3 weeks, and now we put in a close higher. So again, even though this is on a smaller time frame, appreciate cycles, right? Appreciate cycles. You can see that here. Here's a cycle of higher highs. Here's a cycle of lower lows. Typically when these things happen, they happen in cycles. That's the main point I want to get across. Okay, on any time frame. On any time frame. Let's go down to the 4-hour time frame. All right. And again, you can see cycle of lower lows, cycle of higher highs. Okay. One of the things to correlate that we like on the 4-hour is that we like to correlate volume with the bar that we're studying or looking at. Okay, so for example, you look at this bar, close lower on high volume. Okay, close lower. We're just going to highlight some of these. Okay, and notice how after that bar closed on high volume, these subsequent bars kind of meandered around in that range until second close lower. Okay, so that's our new range. That would be our new range within this cycle of lower lows. All right, on high volume. So going forward, we would have anticipated the same thing, and that actually happened. You had a high volume bar here, but it didn't close above this range. Right. All right, now we have a third close lower, and volume was starting to wear out at that point. And here at 5, we have even further lower volume. That's something else to look at. Start studying the volume, because it's telling. All right, low volume Thursday, 5 a.m. bar. At 9 a.m., we had a close higher on high volume, and that closed above this range. It closed above the high of that range. That was the beginning of a cycle of higher highs, and we're still in a range that is closing higher. We're still in the cycle of higher highs, right? We're still in that cycle. We're really kind of early in the cycle too, because there's only 1, 2, 3, 4 high volume bars. All right. By the way, I was just reading a study about a study that was done on high volume candles, and it showed high statistical correlation to continuation. So when we see this, and I've always said this, when you see this, they typically follow, high volume, high volume, high volume, high volume, and that will continue until you get a close below on high volume, close below the low on high volume. All right, now, what does all this mean? How do we apply this? How do we apply this? But before we move on, let's just say that going into the next session, this is our range from 4034 to 4053. Let's keep that in mind. All right, now where does this apply as a stock trader? Now this is the ES futures, and when we closed Monday or Friday, I'm gonna pull over my watch list. Okay, we're looking at the E mini over here, which is same thing basically, only lower leverage, but same idea. All right, close higher, broke above, closed above the previous period's high. That started the new cycle of higher highs, okay? Friday, we closed the 1300 at 40 in this range, 4053, 4033. Now, look at this watch list here. All right, now there's a saying out there, something like the ocean moves all boats or something, but it applies to how you can exploit this phenomenon of, cyclicality, of synchronizing your trades with the market. Okay, that's what I'm finding is very powerful. So all I have in this watch list is change. I have the symbol, I have change, I have the price, the most recent last price, and volume. That's all I need. All right, that's all I've been using, and I've been doing significantly better. Okay. Synchronizing, how do you synchronize your trades with the market? All right, so going into Friday, for example, or Monday, for example, we are still in the cycle of higher highs, right? We talked about that. We're still in this cycle. The market has not closed below this range on high volume. It has to close below this range on high volume before we consider ourselves to be in the sell cycle. All right, so going into Monday, if this range is still intact, we're considering ourselves to be still in the buy cycle. All right, and that applies to so many things, but if we were to look over here and see, okay, well, we're looking at the ES, what's high volume and synchronized with the market? And here's your list. All right, so you're looking at Tesla. If we go over here to Tesla, and you look at Tesla's activity, yeah, it's fairly synchronized with the market. See? Okay, this started a cycle a little bit later than 3-2, yeah. March 2nd, yes, okay. And then we went and made a series of higher highs on high volume in Tesla, all right? So our current position in Tesla was here when we walked into the market on Monday. We came in and just bought there. It's an overnight candle, and we're following the market going forward. So if this guy is still intact and this range is still intact in Tesla, you're going in Monday, buying shares and placing your stop below the low of Friday's closing range, high volume close, not this one, this one. Okay, that's where you're 193. You'd be at the base of that candle, which is 192. So per share, you're risking about $5 or so a share, $5 to $6 a share. All right, so that's how you synchronize your trade with the overall market. And what you're going to find is, as these guys are moving up, you're moving that stop to manage your risk. Okay, that's it for now. I'll talk more about this, but it's really, really powerful, very simple, and it's also kind of fun just to, you're not overthinking the market, and that's been really really good. All right, take care.